Adobe reported their latest earnings report. Stock is down 10% despite a pretty strong report. So what's the problem? The problem was that next quarter guidance missed by 0.6% of the expectations, plus they did not provide new full year guidance. Full year guidance for 2024 was provided the quarter before. We did not get any update. Usually the market wants to hear an update, especially on the upside. They did not get that, but we did get a couple of explanations during the earnings call. Also a comment on OpenAI's Sora and with regards to generative credits. We're going to talk about all of that in just a second. Right now, stock is down actually close to 11% after hours. Market cap obviously is going to be slashed to around $225 billion market cap. Valuation wise, it is not on the cheapest side. Right now with that cut, it's probably closer to 28 times forward PE. Now, if you look at what the analysts are expecting for the coming fiscal years, still some solid growth, double-digit growth for each and every year. And so for those that are interested, the valuation right now compared to its 5-year mean, you can clearly see that we are a bit cheaper than before. Of course, with the 11% hit, we're going to be even more cheaper tomorrow when the stock market opens. But what's even more important when buying Adobe is not only you're getting growth top and bottom line, you're also getting lots of shareholder value, a very, very strong compounder of a company. As you can see, shares outstanding have been coming down for years and years. Free cash flow per share has been increasing thanks to that as well. And they also announced a new $25 billion share buyback program, basically 10% of the company. I start off with a couple of comments here. So one, Adobe drove record Q1 revenue, demonstrating strong momentum across Creative Cloud, Document Cloud, and Experience Cloud. We've done an incredible job harnessing the power of generative AI to deliver groundbreaking innovation across our product portfolio. Adobe's Q1 results and record RPO, remaining performance obligation, reflects strong customer adoption of our innovative products and services. As a result of our strong trajectory of growth and profitability, we are announcing a new $25 billion share repurchase program, which demonstrates Adobe's continued commitment to returning capital to our shareholders. In my opinion, this is a buy the dip opportunity for those that maybe have a position, want to increase that position, or for those that want to open a position in that company. In my opinion, this is, as you will see, a strong quarter, still an extremely strong company. And despite everything that you've been hearing, OpenAI, Sora, generative AI, stuff like that, this is a company that will definitely benefit from that. I'll explain why. Well, they'll explain why and I'll show you why. But before we do that, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we'll really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first of all, Q1 performance as a whole, $5.18 billion in revenue, 11% year-over-year growth, GAAP EPS of $1.36, non-GAAP $4.48. Of course, they are also taking a $1 billion hit from the termination of the deal with Figma. Moving on to the Adobe Document Cloud, revenue there was $750 million. That's up 18% year over year, so faster than overall revenue. Acrobat Web monthly active users up 70% year over year, surpassing 100 million users. Increased adoption through link sharing and stakeholder collaboration drove over 300% year-over-year growth in the number of PDF files sent. In Q1, they also achieved net new digital media ARR of $432 million and revenue of $3.82 billion, which grew 13% year over year. As for the Adobe Creative Cloud, revenue there was just over $3 billion. That's up 11% year over year. They launched Adobe Express mobile app beta. Adobe Express web total usage and exports more than doubled year over year. Highest adoption of Firefly-powered tools in Photoshop, Generative Fill, and Generative Expand across desktop, web, and iPad since the release in May 2023. For those of you that use these products, do share your opinion down in the comments below and your experience there as well. With regards to enterprise wins, they introduced Firefly services to enterprises such as Accenture, IPG, and Starbucks. And the last one here, Adobe Experience Cloud, digital experience revenue of $1.29 billion. That's up 10% year over year. They saw momentum with AEP and native apps, with the combined annualized book of business surpassing $800 million in the quarter. Cash flows from operations for this quarter were $1.17 billion. RPO, as we've seen before, $17.58 billion exiting the quarter. Very, very strong. And they repurchased approximately 3.1 million shares of their stock during that quarter. With regards to Q2 guidance, total revenue to come in between $5.25 and $5.30 billion. Digital media ARR of around $440 million. Digital media segment revenue between $3.87 and $3.9 billion. As for digital experience segment, between $1.31 and $1.33 billion, and digital experience subscription revenue between $1.16 and $1.18 billion, with earnings per share on a GAAP basis to come in between $3.35 to $3.40, and non-GAAP $4.35 to $4.40. Now, they do say here that 2024 is off to a strong start. They're delivering on their product roadmap, and they have the right strategy to monetize these innovations into the back half of the year and beyond. So maybe they're not updating their guidance just yet because they do want to see how the first half of this year turns out, and then they'll focus on the second half and 2025. And so moving to the earnings call, so an analyst here is questioning or asking them about not raising the full year guide. And he also asks about the credit consumption and purchasing patterns of those credit packs. Now, for those that don't know, if you have an account, you get generative credits, which means it allows you to generate images with regards to Firefly, for example. Each time you use it, you use 1 credit. It refreshes every month. You obviously, if you're out of those and you want to use them, you'll probably have to pay more in the future. Now, the monetization of that is still early days. I'll explain in just a second. So first of all, they say here with regards to guidance, so the material change they saw in Q1 was the result of the termination payment of Figma. They've talked about the GAAP EPS impact. It rose through Q1 and will certainly have an effect for the full year. Now, with regards to the guidance they gave back in December, these are the numbers. They are targeting total Adobe revenue of $21.3 to $21.5 billion, which is approximately what the analysts were expecting last time. Digital media net ARR of approximately $1.9 billion. Digital media segment revenue of $15.75 to $15.85 billion. Digital experience segment revenue of $5.27 to $5.37 billion. And then the last one, digital experience subscription revenue of $4.75 to $4.80 billion. And that is still the guidance right now. There's no raise or reduction. So with regards to the generative credits, they say here, don't read anything into that other than they are still very much in an acquisition mode. They want to bring a lot of users in. They want them to use the products as much as possible and see them coming back and using it more and more. They've tried out new things. For example, they snuck music composition where you can take any music track, you can give it a new music type like hip hop and stuff like that, and it will transform that initial track into this new type of music. Just this morning, we snuck our ability to do auto dubbing and lip syncing where you give it a video of someone talking, say English, and then you can translate it automatically to French or Spanish or Portuguese or whatever language. As you can imagine, those actions will not take 1 credit. Those actions will be much more significant in terms of what they cost. To be honest, this is a total game changer for content creators. Of course, since these things will take much more computing power than just generating a random image, you can already see how they will monetize these packages with regards to generative credits. If you want to do lip syncing, translating new music, stuff like that, instead of 1 credit, it will maybe cost you 10, 20, 15, I don't know. And then, of course, you will run out of your credits much faster, meaning they will be able to monetize that certain user faster as well and better. That's the most important part. Now, of course, remains to be seen what the adoption rate will be. We're going to have to wait and see in the coming quarters. Now, moving on to the question about Sora. The analysts ask here a bit about how this will impact the market and maybe how Firefly can participate in that trend. So they say it's great for the market, means that more people will probably get exposure to these new types of technologies, stuff like that. They also say here that they had a really great conversation with Jensen from NVIDIA about what they can do as they are investing in video. Certainly, he would love to partner with us, and we're looking together to see how we can push the envelope on video, as well as using their models, whether it's Edify, which is NVIDIA Picasso, or Nemo. Nemo, remember we've talked about that a long time ago. Nemo is an end-to-end cloud-native framework to build, customize, and deploy generative AI models anywhere. It includes training and inferencing frameworks, guardrailing toolkits, data curation tools, and pre-trained models, offering enterprises an easy, cost-effective, and fast way to adopt generative AI. They say that the proliferation of video models is going to be a very good thing for Adobe. They're going to work with OpenAI around Sora. They're obviously going to develop their own model. We're going to see others developing their own models. All of that creates a tailwind because the more people generate video clips, the more they will need to edit that content. So whether it's Premiere or After Effects or Express, they have to assemble those clips, they have to color correct those clips, etc., etc. So they see this as a net positive. Of course, they're not going to say that this is going to destroy their business model, but to be honest, they have a track record of executing to perfection. And like I said, they have the distribution. They have the millions and millions of users already using their products. Now they can launch their own version of Sora or whatever they said before with regards to the music, lip syncing, stuff like that. It gets exposure directly to all of their user base, way easier to monetize that way. But of course, remains to be seen what the adoption rate will be. Last thing here is the graph. As you can clearly see, after hours at $506.8, we are well below the 200-day moving average, which sits at $441. The 20 and the 51 sit even higher. Now, previously we did rebound around that area, around $506, $510 back here in July of 2023, September, and even October. RSI is going to be a bit less than neutral. In my opinion, this might still be a good buy the dip opportunity. Of course, it can always go lower. Once you go under that 200-day moving average, you're a bit in no man's land. But overall, whether it gets bought up directly tomorrow at the open or not really has to do with the macro, the sentiment this week. Inflation numbers were a bit hotter than expected. Markets reacted accordingly. So there is that. But again, you're investing here in a specific company for the long term. And in my opinion, Adobe is going to be here for a long time. But of course, do share your opinion down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye bye.